This year, in the blockchain space, STOs are a big deal. This panel that's coming up is going to talk STOs, but they are bringing the traditional world of business, they are bringing them together with blockchain, spreading the understanding, and they're going to be diving in that today. The panel has been brought together by one of the great partners of the NextChange Group, and that is CoinStreet Partners. It was founded by Samson Lee, who's going to be joining us. The man, not only was he the founder of this important part of the Hong Kong and China and Asia ecosystem, but he just gives back to the community. He is the chairman of the Belt and Road Blockchain Society Association. Yes, he is a founder, one of the co-founders of the Asia Pacific Digital Economy Institute, and he is also the founder of the Ethereum South China Association. Did I miss any, Samson? I missed the chairman. Sorry, it is the Belt and Road TechFin Association. Ladies and gentlemen, he's just got such a huge resume because his heart goes out to the community and he works his butt off for them. He's working for you today with this great panel he's bringing up. Let's hear it for Samson Lee of CoinStreet Partners. Samson.
Thank you.
All right, there we go.
So
Thank you.
Thank you. Oh, hi everyone. Thank you for Andrew for the nice introduction. Okay, so very great pleasure to be here. How are you? Welcome to Hong Kong for the guests overseas. So today we're going to talk about, well, thank you NextChange for giving me the opportunity to hosting a panel for one of the hottest topics in the industry, STO, security tokens. So I'm from CoinStreet Partner. I'm founder and CEO of CoinStreet. We are a professional consultancy company helping enterprise to transform their business by leveraging the blockchain technology and ecosystem. Some of our peers customers, including the Gibraltar Stock Exchange, Kodak One, Job.com, and some listed companies in Hong Kong and overseas. So for STO, if you look at any of the blockchain media recently, you will find somewhere in the first page about STO. So why all of a sudden everybody is talking about STO? What is security tokens? If you look at the Wikimedia, which we always do when we try to look for things, it's actually said security tokens is a physical device used to gain access to an electronically restricted resource. So it's still talking about that physical security token. So the general public is actually unknown. For us industry people, we know it's a hot topic. So interestingly, a simple explanation of security tokens is security in tokenized format. So it's traditional securities. Of course, there will be new one. And also, some people now it's called digitized security. So STO security token offering or digitized security offering now. If we look at the regulator of US, the SEC website, they have very clear explanation about ICO, but not on STO yet. You couldn't find anything on STO yet. But in December 27, 2018, not too long ago, SEC actually issued a new consultation paper with a very clear framework spelling out about security token issuing, qualification of the issuer, qualification of advisor, escrow agent, even return of funds. And this consultation paper is closed on January 15. So it's actually closed. We should expect more guidelines, more clear guidelines from US about STO. So today, I'm very pleasant and happy to chair a panel with some of the leaders of both the traditional capital market and also the blockchain ecosystem. So here, may I introduce my panel, Mr. Lowe from BMI Group, Chairman and Managing Director of BMI Group. BMI Group is a leading financial service provider which has assisted many companies go IPO in Hong Kong, Shanghai, and also overseas. So welcome, Noel. And then my next guest is Jacqueline Koch, Director of Business Development from Securitized. Welcome, Jacqueline. I guess I don't have to explain Securitize. And then my next guest is Floyd DeCosta,
I'm going to let
fa- founder and CEO of STO Global X, a fully integrated end-to-end platform for regulated security token exchange. And then my last guest is Ben Song, head of Asia from Ledger, the leading security provider and of course co-wallet and our custodian solution. So welcome everybody.
Thank you.
So today, instead of the like Q&A style, so we all got all the experts here. I hope we can just carry out a conversation about STO, sharing your view, how do you see it could be successful and what are the challenges. But before we start, I would like to let you introduce yourself a little bit, so please go ahead.
My name is Jacqueline Kwok. I go by JK. I am the Director of Business Development for Asia markets for Securitize. Securitize is a compliance platform for digitizing securities on the blockchain.
Hi, I'm Benjamin Sung from Ledger. I head up the Asia Pacific business for Ledger. Ledger, for most of you may know, is a security technology provider. We basically provide security related to the blockchain crypto space for retail individuals with the Nano S, to enterprises with the Ledger Vault, and finally, last but not least, also on the IoT side as well.
My name is Lowell Low, the chairman of BM Intelligence Group. We start from a traditional security house. So we got all the license, number 1, number 4, number 6, number 9. And then we start to merge with the cryptocurrency, I think 3 or 4 years ago. And we're looking forward that STO will be a very good product in the future.
Hey guys, my name's Floyd DeCosta, and I'm the CEO of STO Global X. We are a Singapore headquartered venture, and we are the guys that build an integrated security tokenization platform and exchange. This is both the primary issuance as well as the secondary trading piece. Apart from that, we also, in fact, our primary model is to partner with licensed institutions in different jurisdictions of the world to basically deploy and operate the tokenization platform and secondary STO exchanges.
Great, thank you. So not only we have the traditional capital market expert here and also all the innovative technology enabler, we also have a mini ecosystem here. Right? From the issuing platform, the security custodian, all the professional financial service, as you heard, like all the license from financial advisory, brokerage, sponsor, and also an exchange platform. So it would be great to hear about your view. How do you see from different perspectives about this STO opportunity? Or I know you also, your company have a special terms. You don't call it STO, right? And
We call it the DSO, Digital Security Offering, because we think that the STOs is really just having an extra copy of the securities on the blockchain, and therefore it isn't really as sexy or as innovative as people want it to be, but rather a much better way to run a securities offering.
Now, I think that's a great way to look at it. And yeah, you've got two camps. So you've got the traditional financial guys who are, of course, looking to take a traditional instrument, traditional financial instrument, traditional asset classes, and put that on the blockchain. And of course, there's a whole lot of leverage there, right? How can you, for example, the benefits, again, in the traditional space for issuers, if you look at it, you get access to a whole new global market, a whole new pool of investors. You create vibrant secondary markets on the blockchain for otherwise illiquid asset class. On the other side, if you look at the investors, you now democratize investments into a whole range of asset classes that are previously not available to common or simple accredited investors, or even the common man. And of course, the taken out of the middleman, right? But that's the traditional piece. But then you also have the new asset classes that you can now bring to the fore, the new products, structured products that can be made possible because of this new technology. So I think that's a great way to look at it if you just move away from STOs, and which is taking old stuff, putting it on the blockchain. Yes, it has its value, but then, yeah, whole new asset classes and whole new financial products.
To add to Floyd's point, it's interesting because we have this one client that wants to issue a daily dividend, and because of the programmability of this technology, you can actually execute a daily dividend, which impacts how financial deals is structured, because that impacts your cash flow and impacts valuation and so on and so forth. And because of this technology, you're able to look at this fairly traditional industry at a new lens.
Yeah, I think also one of the big impacts that STO is going to have on the traditional capital markets, if we think about today with capital raising, you have like angel investing followed by venture capital to private equity, and then maybe OTC to finally an IPO. And what's going to be very interesting if I was an angel, venture capital, or PE is that I'm going from an investment strategy that traditionally is relatively illiquid, where I'm not thinking about exiting an investment, within days, months, or even years. It's always holding horizon of 5 to 8 years. But all of a sudden now my portfolio is going to be constructed of investments that I can kind of enter in and out. And I see it as kind of a double-edged sword in the sense that, one, when you bring liquidity to the market, you also need to know how to manage liquidity, because I think all of us has probably invested in a stock at some point and said, oh geez, I saw some news and it made me sell too early, or I bought too early. And I think what you're going to see now with the STO market is something similar as well. So I think venture capital and private equity fund managers need to start thinking about this as a new challenge and a new skill set that they need to add as well.
Yeah, but here's the interesting thing, right? For a lot of people, it's the transparency, like you rightly said, is a two-edged sword. Can you look at movements on the blockchain and things changing hands and then basically try to preempt markets? And now these are, regulated markets. But on the other side, it's no longer restricted to two people knowing it. Now everyone can see it, right? You didn't see it, that's another thing. But yes, this is now, transparency at a whole new level.
Yeah, I think from a traditional security world, the STO bring in a great opportunities, try to merge the new world and also the old guy, and it create a very big opportunities because it's the products that's going to merge the two world together. So that means we are double the resources and then together, and then when we implement that, probably the problem is also when we're merging these two worlds together, there's a lot of bridge that we have to solve. And then I think one of the things is how we can assign, from the old security world, the most important thing is how you get your dividend, how you get your voting right, and then how you can vote, how you can link this kind of right to the currency. I think that's something that we have to think about from a legal prospect and also from a technology prospect. And one of the things that we are thinking about to solve the solution is we have to have using a trustee to do something like that. And then I know that you really from a trustee industry. Probably you can also share some of your thinking about that. I think that is one of the key points that we are going to address. Yeah.
That's very important because now a lot of the STO discussion or initiative is driven by service provider or enabler, right? Trying to make it happen. But on the execution point of view, how do you actually execute it, right? For example, many people talk about asset-backed token. So, but if asset-backed token issued by a private enterprise and you are doing a contract, because my contract is actually a contract with a private enterprise and they promise something asset-backed, but if anything goes wrong, the process of dealing with that dispute is a nightmare, right? Although the concept is asset-backed. So Noel brought is an interesting topics about having a trustee in the middle, right? So how do you see this could be implemented with a traditional trustee with technology?
Yeah, I think one of the things is with the crypto asset class at the end of the day, is that unlike the traditional banking system, you make a transfer to a bank, you can always reverse the transfer. You have someone like Swift. With crypto, as we all know, it's a one-way street. So from a security standpoint, it's a lot more delicate in terms of how we house the asset, how we protect the private keys. Now, I think with STOs, one of the great benefits is that you will have kind of a list of registered, accredited investors. So the likeliness of your funds being stolen, at least there's going to be mechanisms that allow that for your tokens to be reissued. But this is where I think combining the traditional custody services along with the technology is going to be absolutely very, very critical, because you need a way to safely safeguard the assets, but you also need a mechanism, as Lowell mentioned, is how do you pay out the dividends? Should there be a proxy vote? How do you kind of manage that? So in some ways, this asset class, I think it brings more simplicity, but infrastructure-wise, I think it does need kind of a merging of the traditional and the kind of the new world together.
I think a lot of that can be programmed into the smart contracts, which is part of what Securitize does, but at the same time, the market, I don't think, fully trusts blockchain capabilities, doesn't fully trust smart contract capabilities, that there still needs that middle person entity to be able to bridge the gap between what is new and what is old. And in time, we'll see those paths merge, but today, that is not the case.
Yeah, and it's interesting what you mentioned, and Ben yourself too. Today you have the opportunity with STOs to kind of take some of the best practices, some of the stuff from the old world that people, not just bankers, issuers, but even customers, investors are comfortable with, and try to make that a lot more effective, a lot more efficient, and do it in a much more smarter way using blockchain technology. And that's where STO sits right at the junction of the old world and the new world, right? And that is probably a good place to start, right? So you've got the new technology that's enabling a whole lot of new things, a whole lot of new models, a whole lot of new ways at looking at capital markets. But yes, it still has the custody, it still has the trustee, it still brings about the traditional issuer that puts an asset into custody and then gets tokenized, right? And that's where the comfort feeling, with investors, with other capital market participants, then comes to the fore, and you see an acceptance of this new way of working. It kind of just smoothens out, takes out the friction, right, by merging the best of both. And that's when you see a capital market company, with a licensed entity, licensed by the regulator, which knows the process, which has been dealing with IPOs and traditional capital raising for years now bringing that and playing that bridging the gap between the brand new technology we have, the brand new way of doing things, and yet making traditional investors comfortable till they kind of move over to the new way of things.
Legally, when a trustee done the job and then bring the dividend right and also the voting right to the coin holder, then you have to go through the KYC process. You have to know exactly who is owning this right, and so that when you get the money from the company, then you know where you distribute your money for the dividends. But on the other hand, on a coin trading right, it's usually on a no-name basis. The coin is trading, all around the day. So that is something that technically we have to solve. How we can link up the two well, something that, if you want to get dividend, you have to give me the name. But on the other side, the beauty of the coin is, I can trade with a no-name basis. That's something that we technically we have to waiting about that. We have to solve that. That is one of the technical points that we are thinking about.
So Securitize has that exact setup between the exchanges that we integrate with, and that's why we have to have approved exchanges that abide by the compliance protocol that we put forth, making sure that the KYC, AML, and investor accreditation portion is done up to par to enforce the compliance that is required for any security offering. And right now, there is a technology solution to that in terms of how Securitize works with an exchange such as Open Finance. There's an API that makes sure that both products talk to each other. But that process is going to be a slow one because exchanges are hard to build and exchanges compliance is hard to enforce and to automate.
Yeah,
Okay. So I'm going to put on my investor hat, right? So for example, I think like the example you bought is wonderful, like daily dividends, right?
Yeah.
Very attractive STO, right? From outside. So, but if I'm investor, think about the execution level. So I buy this STO from a pirate company, right? They have all this promise.
Yes.
Put it on the smart contract.
Yes.
What if they default? Say they don't pay the dividend that they promised to. Although you have all this technical infrastructure, if dividend is paid and how it's going to be distributed, maybe even through the stable coin, it doesn't have to be in fiat. But when it is paid, right? So what if the pirate company didn't do that, right? Because in a public company, if they promise you a dividend, you can actually get the dividend because they're regulated, they're listed. So how do we handle these promises, contracts with pirate companies?
It's a very good question.
One of the thinking that we want to do is we will trying to use a traditional way. Let me introduce a little bit in the traditional way. I mean, how you can get your dividend. Usually, when a company declare a dividend, then he will set up a 2 date. One is a record day, another is the payment day. So in the record day, that on that day, who is on the register of the shareholders, then that is the guy that is going to get paid on the payment day. So after that day, then you won't get paid. I mean, for your dividend. So that means it is not the duty of the company to do the update of the register, but it is the duty of the investor who own the shares or who own the right, who come to the company register or come to the trustee, and then saying that, hey, I'm the owner, so please record me and then get me paid for the money on the payment date. So I mean, so if we try to link up to the coin market, that means, oh, okay, as long as there's no dividend, then no one will care about registration. Okay, so the coin will still trade on a no-name basis. Okay, and then once the dividend is declared, then the record day will also be announced. Then the coin owner will then make the decision whether he's going to register his name that in order to get the money. So that is some of the solution that we think. I mean, in this way, the investor still is the had the free to make his choice whether I want to get the money but expose my name, or I still want to just hold the coin and then I don't want the money, but I want my name still not disclosed to the world. So that's something that that can match a little bit. I mean, the difference of the two well. Yeah, that's some of the thinking that we are suggesting. Yeah.
Yeah, and I think you're right because, and today exchanges, but also the issuing platforms and all do maintain a register, and that's the difference where, you know, it's not just about, you know, doing a standard KYC or everything, and you know what standard procedures we've seen in the past with crypto, right? This is where you, at every point in time, you need to know who has the token or who's the owner of the token so that when the dividend becomes due, either the token owner, and this is usually the guy that invested, is then eligible, or the trader who's trading on an exchange but now has the token in his wallet, puts his hands up, and then lets either the treasury or the platform know that, hey, I now own this token, right? So at every point in time, or at least closer to the record date, the company, the issuer, is able to kind of point out and say, these are the X number of holders of my token, and the dividend is now issued to this. Beyond that, anyway, it goes outside the scope, even in the traditional world, right?
Yes.
Yeah. And
Yeah.
yeah, hello. Yeah, and I guess, Sam, to your question was like, you know, how can you ensure that a payment of dividend actually happens by the company itself? I think the reality is a STO doesn't protect you to ensure that a company pays a dividend. At the end, investing in STO is no different from today, me investing direct into a private company that guarantees me that they're going to pay me a dividend. But one thing to clarify is with STOs, at the end of the day, there's the on-chain piece, but there's also a lot of work that needs to be done off-chain to collateralize, the assets against the tokens. So, security tokens at the end will be regulated as securities as well. So, quarterly audits will be required. So there's going to be ways to verify that at least the asset still has its underlying value. And to make a claim should a dividend payment be defaulted on, it wouldn't be too different from how the traditional markets would be done as well.
Exactly what Ben said. Just because we have the technology option to do so doesn't mean that whatever happens in the real world can't happen as well at the same time. It absolutely has to.
Yeah, and adding to, for example, what happens in case of a default, like we were just chatting earlier, what about, if you take any STO and any asset class that's been tokenized, right? If you look at an STO, you've got two axes, like we were discussing. One is, of course, the capital market access, and you've got what the regulators, the SEC and the SEC and the other regulators. But you've also got asset classes. So, for example, like Ben and I were discussing, if it's real estate, in a lot of countries, ownership of a real estate is still regulated, right? How do you restrict foreign ownership and things like that? How do you make sure only locals are investing in these, right? Again, a lot of countries have capital controls in place. There is restrictions on foreign direct investment into a lot of asset classes, into a lot of industry sectors. How do you take care of those things, and how are those things managed so that you comply not just with the capital market regulations, but also with the vertical and the asset class specific regulations that are there in place, already in place in most countries?
Talking about how you can make sure the company pay the dividend, in fact, in the traditional world, they have some solution. They try to make some, not just common stock, but also preference stock, even convertible bonds. That means we can, in fact, follow the same thing. That means putting in the smart contract. That means the company is obeyed to pay dividend every year. And then after that, you still enjoy, some more dividends, something like that. That will solve some of the problem that if some of the investor want the liquidity to be gone, but in sometimes you also want to have a fixed income on that, then that is also can be done. I think by using smart contract, by using a trustee, and then the money can be collected. But as I say, the problem is still not solved. Is that the investor still need to make sure that he have to make a choice whether he want to enjoy the benefit to be no-name basis, or he want to have the benefit to get the dividend, get the cash. That is something that he has to make the choice.
Well, this is very interesting because it brought up another point, because we all know like KYC compliance is a big thing for STO. So what you're saying is that we can actually take the KYC process, like the initial subscription and the subsequent identity separately, right? So I can subscribe, I go through all the KYC, show I'm a professional investor, fully compliant and all, but also not disclose my identity, right? Still remain anonymous until the day I want to get paid of a dividend, right? So if this STO don't have a dividend, so I can just continue to stay anonymously owning tokens and.
I am actually not sure how that is, how that would be executed legally. If you're anonymous, I don't know how one would own a security of a company. So I'm curious to know how that is possible.
Yeah, I just talking from using a traditional trust law. Okay, as a trustee, the trustee can assign the job that he will pay whatever on the list of the register. That is a KYC. That's a name. Okay, but then in fact it's one thing similar like a traditional share registration. Yeah, I mean I'm doing that. But then the part how you can whether the coin will be traded on the market and then that is something similar like a private deal. Take for example, I buy the shares of a private company, and then so I got the right of the dividend. But then I also want to sell to you. Yeah, but it is also a private deal.
Yes.
Yeah, so that means and then but I have to told you that if you want to get the dividend, then you need to go back to the company that I own, and then do the registration.
Yes.
Then that is your decision. If otherwise,
Got it.
I will still be on the name. I will still be the people
Yes.
that get the money. Yeah.
Yes, 100%. Then I understand that now. And I think it's actually impossible for me to add, if I don't go through KYC, I can't even receive that underlying token.
Yeah. So that is the decision of you,
Yes.
whether you want to do it or not.
Yes.
Yeah. So it a kind of link between the old the traditional industry and also try to bring the benefit of the asset, and then but it is a choice that made by the investor.
Yes.
So that is important. I mean, always you make a decision whether you want to get it or not. Yeah.
Very interesting.
Yeah.
Because traditional means reliability, legal compliance, trust. And then the new world is the technology, the innovation, so it's great to see the convergence. So one big question about STO is the liquidity, right? We see many news like how many STO is coming out, what company is issuing, but who is buying it is a big question, right? So especially now, STO, we all know, is targeting to the professional investor, right? For example, using an example of the property, right? We mentioned about property back. We talk a lot about fractional ownership. So if you think about a professional investor, they all have different definition. In Hong Kong, I think $1 million US net worth or certain income. So for professional investor, I'm sure they have a lot of choice, right? Some might afford to buy the whole property, not 1/10 of it, maybe even more than one. I know in Hong Kong, people collect properties. So is this fractional ownership really attractive to the professional investor? And also another question is on the liquidity, is a lot discussion about exchange, right? Because when we came out from the ICO age, it's all about exchange and how they do it. But for liquidity on security token, if we're talking about, for example, in Hong Kong, to issue a token for 50 investors, 50 shareholders, do we need an exchange to serve transaction between 50 shareholders, right? So what do you think about that?
We think that right now, the liquidity isn't there, the demand isn't really there, because the option to do so wasn't there prior. But now, as the STO industry further matures, that option is going to be there, and liquidity will come. It's just not here right now.
Yeah, I have an interesting take on that, and especially since you said, an exchange. An exchange to fundamentally operate needs liquidity, right? And my thinking is I think liquidity will come when you have the institutions, the large institutions come into play, right? Now, if the asset managers, and things like that. Here's the other thing. Also, asset managers, again, aren't really going to look at single tokens, right? They're not coming to buy single tokens, many of them. They are going to look at when there are a number of tokens out there, can we go and create structured products? And so you have asset managers that will create structured products that institutions can buy into, right? And that's when you'll see liquidity coming. So one of the things is got to be these structured products. And going back to the example you gave of real estate and people owning properties, yes, you can own a building in Hong Kong, for example. But now if I have this option and I have structured products, I can own a little part of a building, a luxury condominium in Florida, a piece of a building in London, a piece of a building in Hong Kong, a small part in Singapore, a small part in Sydney, for example, and all of these, because they are now represented by tokens, can be bundled into a product by an asset manager and sold to institutional investors or even HNIs that want to now own property. Instant diversification, instant liquidity, because I can then unbundle and sell off pieces, and now these are things that large institutional and professional investors can look forward to. And so rather than saying one building in Hong Kong, how can I own a portfolio instantly by bringing these together, right? And now you have the opportunity for asset managers to bundle these structured products and make them available. These were the new asset classes, the new type of things that Jacqueline, you mentioned earlier also, right?
Yeah, I think the STO market, even as it gets more mature, you're never going to see it like a traditional equity market or the ICO market where you have kind of like tick by tick trades. So I think STO still, to a certain extent, it will still be, I would say, kind of a super OTC, call it, something that's a little bit faster. But I completely agree with Floyd, I think it's the ability to have the diversification play. If we look at a lot of traditional funds today, they're still very concentrated into one asset class or one geography. And what STOs allow you to do is now I could have fractional ownership in property in Thailand, in Hong Kong, in Tokyo, and you're able to also potentially get around a lot of traditional restrictions around foreign ownership as well. So I think it will take some time for institutional investors to start coming into this STO space. But as more and more, as I mentioned earlier, I think venture capital, private equity firms will see this as a new form of investing, and we're probably going to see these traditional private equity funds be a blend of the two at the end of the day.
And then I think so liquidity automatically gets addressed then on the back of that, right? And then you create all new vibrant secondary markets. The other thing, Sam, you and I also been talking about is the verticalization, right? The sector specific. So can we see an STO exchange that's very focused on real estate, right? And then you've got asset managers that can come and bundle and structure these products around that, right? Again, heavy industry, another opportunity to look at a very specific case. Commodities is another straightforward one. And if you take some of the metals, gold and all, you're already seeing participants building out these marketplaces, right? But very specific, and this is where you have people that operate, traders, investors looking for very niche sectors can go and find, one, the primary tokens, but number two, also the secondary, these products to not just subscribe to, but then also trade on. Suffices both the investors as well as everyday traders.
Yeah, my thinking is because we are bringing the benefit of the security to the coin, so we also there's no free lunch in the world. So the company have to attract the investor by paying dividend or even think that you have to have more compliance. I mean, not just in the old day that, oh, I just use the coin and I don't need to do anything. I think the law is setting now everywhere in the world, and then more compliance requirement will then impose on the company that is going to issue the STO, and the bad thing for this is that means the company have to pay the compliance cost. That is the cost that you have to pay for the benefit of bringing the security benefit to the coin. So an equilibrium will then form. I mean, in some way, if there's too much compliance cost on that, then it will kill the benefit. Then some way, then we will stop in some way that both the investor or the company is willing, to pay and give and take for that. So that is something that always happening is, the way it's always happening is that we're facing problem and then we find a solution, and then another equilibrium is going to bring up, and then after the equilibrium is bring up, then some problem is coming up, and then changing the equilibrium. So that will be a long way, but I think everyone here is used to that. That is the world. That is the real world. Is that you won't have a problem-free world. In fact, if that is the day, then probably the world is all that. So very promising is everyone here is probably is making the decision how the STO is going to change.
Okay.
And again, sorry, Sam, one more point. Also, liquidity is, yes, it's required to be a driver of STOs, but I don't think it's a new challenge. There are enough of stock exchanges in the world and enough of scripts in the world that are absolutely not traded. And in fact, cryptos are traded more than most traditional stocks in the world also, apart, of course, you take out the blue chips, right? So I think it's a common thing. And you automatically see participation and liquidity flowing towards anything that starts to emerge and anything that's credibly addresses a problem.
Great. So to wrap up, we almost time's up. In the Hong Kong Blockchain Week, I'm going to ask a question about Hong Kong, right? So we all know Hong Kong is the #1 IPO place in 2018. I hope it stayed the same in 2019. 2018, we raised over $30 billion in Hong Kong from IPO. So how do you see, if STO is really the way to go, is really the future, right? Because we now see some of the really large banks in US really aggressive going into this place. So how do you see Hong Kong can be the world #1 market for STO?
For sure, if Hong Kong want to continue to be a #1, Hong Kong has to build a multi-financing platform that can fit different size of company. Okay, so I will see. I mean, Hong Kong is #1 now, but Hong Kong is not really very good in helping the innovative company to raise money. So something has to be done, and then because any big company come from small company, and small company come from innovative company. So we have to build a platform that a lot of investor is willing to take the risk to invest in those innovative one, and so that will be a full platform. Like we say is you got the kindergarten, you got the primary school, you got the secondary school, but you also get the university. That I think something that Hong Kong have to work on that, and then that's why I'm saying that everyone here is building the future of STO, and definitely I believe Hong Kong must go in this way. Otherwise, Hong Kong is going to lose the leader in the future.
Yeah, just to add to that, usually, and the simple answer is you always put it onto the regulator, right? You need to clear that. But I think leave that aside because that will come. I think it's the ecosystem, and I think that's what Hong Kong has, right? And many cities in Asia, I know Singapore has it, for example. You need an ecosystem to come together. You need the innovators, you need the entrepreneurs, you need the licensed institution to come together on not a single platform, but multiple platforms to bring it all together to create that network, to create that space, that marketplace, right? Just like you have the traditional market, that the $30 billion, you need that equivalent within the crypto space. You need blockchain companies and the thought leaders to come together and create that market. And I think Hong Kong is very, very well positioned for that.
Yeah, I think Hong Kong is the perfect place. Like, the regulatory environment in Hong Kong is one of the most respected in the world. So I think it's less so a question about will the regulators be accepting of STOs at some point, but I think it's about building together the right infrastructure, as Lowell has mentioned. You need to have the right kind of advisors. You need the investment bank side, you need the prime brokerage side, you need the custody side, you need the security side. So you need the exchange side. So you have to have that consolidated platform all brought together, I think, ultimately for this to work. But at the end of the day, I think the Hong Kong government is actually very pro to capital raising and for businesses to succeed. So I think this is a reputable market that's a very good fit for STOs.
They basically covered all the points. Everybody needs to come together and work on this together. And this technology is there. We need the market to adapt.
And of course, you need events like this.
Amazing. We start here on Hong Kong
Exactly.
Blockchain Week. All right. Thank you very much.
Thank you.
All the guests, really for sharing all the. Okay.
Thank you very much once again to Floyd, Benjamin, Lowell, Jacqueline. Great job. Look at the camera. Don't look at me. There you go. All right. And of course, Samson Lee, the man behind Coin Street Partners. Fantastic job, Samson. Thank you for pulling this panel together for us. You did all the work, ladies and gentlemen. Let's hear it for them. Thank you one more time.
Thank you.
Thank you very much.